What's going on, everybody? It's Jeff here. Welcome back to the channel. Finally, we are off to a good green start for the week after the last 2 weeks were pretty much a bit of a bloodbath. Many of our portfolios took a pretty red, bloody hit, and now we are starting to see a little bit of that reversal. We're going to go over in this video the news that is leading to that reversal, where I see the market continuing to go over the next few months. We're also going to go over AMC. It's had a great turnaround and start since that 801 close on Friday, and I'm also going to go over a pretty cool article that I read that is really leading me to believe where investors think that stock is going to go over the next couple weeks. So stick around, guys. You're not going to want to miss this. For those of you that are new to the channel, if you find any value in this video, please consider giving it a thumbs up and subscribing to the channel. We'd love to have you a part of the family. I also want to say this, guys, if you are not already invested in AMC, it is a very volatile stock and there is high probability for it to go either direction. So please do not invest without having that knowledge and mentality in your mindset. I don't want to lead anybody to believe where this stock is going to go either way. Just wanted to get that out there. All right, guys, let's get into the video. Let's take a look at the Nasdaq. It is up 320 points, almost 2.5%, which is awesome because we saw it pull back over the 1 month from a high of about 14.1 all the way back down to 13.1. It's about a 6.5%, 7% retracement. Can't really call it a correction. They say 10% is a correction, but it's pretty much a big of a pullback. I can think that we're pretty much out of the skates. I'm not going to say it's not going to have a couple of red days, but I don't see that pullback really continuing for a couple of reasons. The first off is the stimulus negotiations. The pressure has now turned to the Senate to close the deal on Joe Biden's $1.9 trillion COVID relief bill. The House has passed it. It looks like the Senate is going to revise it a little bit, and they will not include the $15 an hour minimum wage, but it is going to include the $1,400 stimulus direct payment to Americans. It varies based on your income. You're going to get more if you have children and so forth. You could look up to see exactly what you're going to get. But what it's going to do is it's going to help individuals go out there, spend more money, which is going to make the stock market go up a little bit, as well as put money in our pockets to where we can add to our portfolios on our favorite stocks, which is a good sign. Investors like this. It's looking like it's going to pass soon. They do have a March 14th deadline. It says if the Senate passes their version of the bill by the end of the week, that gives the House time to repass the new version in their own chamber. It also gives the president time to sign it and gives states an opportunity to readjust their unemployment benefits with the increased benefit because that was due to expire. So it does look like it's going to happen very soon, which is awesome news for investors. What is even more important to me is this article right here, guys. The 10-year Treasury yield has softened after last week's surge. It was really last month's surge. Ever since February 1st, I believe it rose about 48 basis points, which is huge. I made a video talking about how the bond market relates to the stock market and why investors will shift their money out of stocks and into bonds when their yield and rates increase, okay? Check out that video. It's very important to know, and it'll give you some inclination on where the market might be going in the future and when there might be a pullback happening, just to give you another perspective on the stock market. But it's good. The 10-year Treasury and the 30-year Treasury it climbed and it started to pull back, which is a good sign, meaning that investors will not choose to invest in bonds because they want the stocks to continue to go higher, which is a higher risk. Bonds are a less risk, and you want the gap of percentage between dividend and yield to be very wide. So the investors say, you know what, I'm going to take the risk because the reward is much higher. When there's not much of a reward, that's when the investors say, you know what, let's just stick it in bonds because there's no risk, okay? So I made another video, like I said, explaining that in much deeper fashion. Check it out. It'll really give you some great knowledge. Let's talk about our baby AMC. It is up $1.28, 16% for the day. I'm going to refresh it. It's at 906. It's pulled back a little bit. It reached a high of, I believe, 944 for the day, which is awesome. This is exactly where I expected to see it go. I did have a prediction of potentially seeing it get to that $10.50 to $11 range on Friday, as long as individuals continue to buy, investors continue to dump into the stock, and more options are written for this. I did not expect to see Monday as a huge surge. I know a lot of people talked about that 801 mark and saying there was 154 million shares that were going to be bought on Monday. Well, as somebody that has purchased many option contracts over the last couple of years, I never exercise them at the end and buy the shares. That's why I buy options in the first place, because I don't have to buy the shares. I could sell it back to the market maker, get my profit, and turn my money around from there. And this is exactly what I expected to see happen, and it's a great start. 14% is actually awesome. Now we're going to get into let's talk about where what's going on in the options contracts right now. It is still one of the highest active options for the day, next to Apple. Apple's always up there. If you see me in this video using barchart.com, I always talk about Apple. However, the spread is a little bit different. It's 60%, 40%. In my previous videos, we had 82% on the call, 17% on the put. As the price begins to rise, obviously you're going to see people switching over to short, and they also might be institutions hedging their positions by playing both sides of the spectrum, which is not uncommon. Experienced investors and institutional investors will do that to minimize their risk. Their gains are a little bit less, but like I said, you minimize your risk, and if you really want to build wealth over a long period of time, that should be your number one goal, guys, to minimize risk. Okay. Next, I want to talk about this article that I had read about. It's pretty cool just to see potentially where it could be going, and take it with a grain of salt, guys, because like I said, there are a lot of individuals that do have a huge long shot on where AMC can go, and I don't want to get anybody's hopes up or just thinking that, we're going to take the stock from $9 all the way up to $900 in the matter of a couple weeks, and you're all going to become millionaires. So just keep that in mind, guys. All right. But the implied volatility is surging for AMC stock options right here. It states investors in AMC need to pay close attention to the stock based on moves in the option market lately. That is because the March 19, 2021 $130 call had some of the highest implied volatility of all equity options today. What is implied volatility? Implied volatility shows how much movement in the market is expecting in the future. Options with high levels of implied volatility suggest that investors in the underlying stocks are expecting a big move in one direction or the other. It could also mean there's an event coming up soon that may cause a big rally or a huge sell-off. However, implied volatility is only one piece of the puzzle when putting together an options trading strategy. So just a little bit of advice for you, and I really want to say this is advice for individuals that are already holding no matter what. I don't want to say, if you got out of this stock, if you had want nothing to do with the stock, please don't let this one article or this video just transfer your decision to just automatically jump into it and think it's going to go to $130. However, this is also good news, meaning that the more options that are written, the more shares that the market maker will buy to manage their risk and hedge their position. Okay, market makers will buy shares when you buy the options. They do that to minimize their risk. Does it always happen? No. However, when the market makers do not do that, they are taking a very, very high risk. And if something goes the wrong way for them, that's when bankruptcy can happen, and it gets very ugly. So I would be comfortable by saying 99% of the time, the market maker will buy shares. That is how a gamma squeeze also happens. If you want to learn more about that, check out my last video. I talk all about that. So I wanted to come to you guys just saying that we're off to a great start, and I thought this was pretty awesome. I heard about the GME $800 call, but I didn't really know about the March 19th $130 call. That's 13x from where we're at, which I think is pretty amazing. I'm sure there's an amazing price on that, and I would love to kind of see where it begins to go. If you guys are looking to figure out exactly what options pay, there's this website. It's called optionsprofitcalculator.com. You would go under long call, be able to put in the AMC symbol, as well as select option, and you can scroll all through here. This would be the March 19th $130 call. It actually only goes up to 40, but if you're looking to check out how much what a call might be able to pay, or more about options, it's a great little website for you guys to check out. So I'll leave a link down below in the description. You can feel free to check it out and kind of figure out exactly how much it would cost you and where potentially your profit might be. But guys, that's it for this video. If you found any value, please consider giving me a thumbs up. We also have our private community. It's the first link in the description. We're growing pretty fast, and we'd love to have you over there. That's it for this video, guys. I'll see you in the next one.